Hey, welcome back everybody to Altcoin Daily. My name's Austin. In today's video, I want to share with you the latest data involving Bitcoin, the latest data involving Ethereum, as well as lower cap altcoin news that you should know as an investor. So if you're interested in making money with cryptocurrency, click subscribe right now. We drop a video every single day demystifying this cryptocurrency market. Let's jump in, starting with where we are with Bitcoin. U.S. inflation has just risen to 7.9% in February, a fresh 4-decade high. Another way to say this would be the consumer price index, i.e., the prices of consumer goods on the market, how much they cost, rose 7.9% over the last 12 months, the fastest since 1982, the U.S. Labor Department's Bureau of Labor Statistics reported Thursday. And keep in mind that these are just the quote-unquote official numbers. They're not actually telling us how much inflation actually is, but you can look, you can see at used car prices, food prices, gas prices. That's the true consumer price increases for the average person. So if you hold Bitcoin, what does this mean for you? Well, Bitcoin, the largest crypto by market cap, held steady at 39,300 5 minutes after the report was released. So the Bitcoin price remained unaffected, but of course we know as Bitcoin holders, the true meaning of something like this is so much more. Breaking. Bitcoin's inflation rate, currently sitting at 1.7%, continues to follow its pre-programmed, fully predictable downwards trajectory. So Bitcoin is completely trustless. It's transparent, it's predictable, it's built into the code. And while we know that the last Bitcoin won't be mined for over 100 years, there's only 21 million Bitcoin. Every 4 years, roughly, the inflation rate gets cut in half with the halving. A trustless, transparent monetary policy. As opposed to the Federal Reserve, there's nothing more manipulated. We don't know how the monetary policy will change month to month, year to year, totally at a centralized company's whim, not even elected, those individuals. But that is why we have Bitcoin, to quote-unquote opt out. Like it, support it, get this information out there. But that brings me to my next question. Why is the Bitcoin price still consolidating? Why is the crypto market seemingly still trying to find a bottom? Well, let's look at some of the recent data. This is local Bitcoins, meaning a peer-to-peer exchange, local Bitcoin's BTC trading volume in Ukraine and Russia compared to the world. So far, not seeing any blips of volume since the outbreak of the war. So let's zoom in on this data. On the top is worldwide, then Ukraine, then Russia, and this is a long time span. We can see around here is 2015, this is 2017, this is actually 2019, and where we are today in 2022. Trading, investing in these European regions, and just everywhere in the world has declined, at least on the local level, the peer-to-peer. Somebody comments, as a Ukrainian, I can't use local Bitcoins. It was banned before the war. Somebody else says, many overstate the Russian-Ukraine trading volumes going on. Thank you for this. And this is a very interesting statistic, data taken from CoinDance, posted by analyst Willy Woo. Give me your thoughts on this down below. My personal thoughts are, during a time of war, like when your country is being invaded or doing the invading, whatever, that's not the time you think about, hey, I gotta buy Bitcoin right now. It's the bigger implication of the Russian citizens being cut off from MasterCard and Visa and the traditional SWIFT payments network system. And of course, the bank runs in the Ukraine by the Ukrainian people trying to get their own money. That makes me want something like Bitcoin in the long term, something not controlled by any single government in the long term. Of course, in the short term, so much uncertainty, anything can happen. But that brings us to Ethereum. What about Ethereum? And I'm going to keep it real with you, like always. There is bullish news, fundamental long-term bullish news, as well as short-term bearish news. I will share with you both. Ethereum gas fees have now dropped to their lowest levels since August 2021. So that means less people are using Ethereum's block space, there's less usage on the network, and fees are going down. According to the data sourced from Coinmetrics shared by CryptoRank platform, the 7-day moving average cost of an Ethereum transaction as of March 9th totaled just $11.14, placing it back amongst the levels recorded mid last year before it surged dramatically to as high as $55 at the tail end of 2021. So let's just look at the actual chart. This is us in March of 2022, back to the levels we saw not since August of 2021. Of course, back then we were trending up. Now, unfortunately, we're trending down. Now, the trend is usually your friend, as they say. But the bigger question is why? Why are we seeing less usage? Well, it was the booming growth of Ethereum's non-fungible token, NFTs, as well as decentralized finance sectors that caused all that huge usage last year, and lower congestion and lower fees appear correlated with waning speculation or interest in NFTs and DeFi during the start of this year compared to last year. So it was that huge profile pic NFT boom that caused that incredible need for block space with Ethereum, and obviously that has waned. Now, what does this mean for you as an Ethereum holder? Well, to me, this says we're trying to find a bottom with Ethereum usage, and maybe we found it, maybe we're about to head back up. But either way, if this is indeed the bottom, or if we're about to reach it, we will first see these points of consolidation like we've seen so many times before. After that, we should look for increasing higher lows, which may lead to higher highs, instead of lower lows and lower lows as we're seeing now. Again, this is all short term. Every network has times of lows and highs, all part of the natural progression. But short term, this is where we stand. Well, how about long term? Why am I still buying the dips? Why am I still bullish long term? Well, the ETH 2.0 staking contract now holds over 10 million Ethereum. Huge green flag, huge fundamental indicator on the underlying strength of the community and where this network is headed long term. Next up, let's talk about altcoins. Which projects are currently seeing growth? Well, I encourage you to check the timestamps down below, but first I want to take 60 seconds and give a big thank you to sponsor of the channel, BlockFi. These are actual quotes from you. Applied for the BlockFi credit card on Tuesday, got it 2 days later via FedEx. That's the fastest credit card delivery I've ever experienced. My Bitcoin rewards card arrived today from BlockFi. I just paid some of my monthly bills and earned 3.5% back in Bitcoin, loving this promo period. Woo, some very happy people. So why haven't you picked yours up yet? Of course, I'm speaking of the BlockFi Rewards Visa Signature Credit Card, where you can earn 1.5% back in Bitcoin on every single purchase. And of course, if you sign up right now, during your first 3 months, you can earn 3.5% back on every single purchase in Bitcoin. There is a link down below. That's blockfi.com/altcoindailycc. Great way to stack sats passively. Link down below. Next piece of news on Vechain. Vechain unveils launch date for its first stablecoin called VeUSD with a $500,000 airdrop. Very cool. Here are the details. According to the report, VeUSD will be launched on the 14th of March 2022, and to celebrate, this $500,000 airdrop is going to X node holders. So if you're running a node already supporting the network, you're the ones that would receive the airdrop. And in a direct quote from Vechain, the launch of VeUSD marks a special moment for us, helping kickstart new objectives for the year and enhancing our capabilities in the enterprise, sustainability, carbon, and financial fields. As a versatile Layer 1 public blockchain, we envisage many exciting use case scenarios to come based on client requests. In addition, it also serves to boost the scope of functionality for our growing NFT and DeFi ecosystems. So the Vechain Foundation is making moves, launching their first stablecoin. Next up, let's talk about altcoin THORChain. THORChain spikes by 34% after activating synthetic assets. And in a direct quote from one of the developers, trading with synthetics on THORChain has half the swap fees, making swaps cheaper, cheap gas fees, and faster for traders. You can do near instant trades at a high volume. So if you like THORChain, you like this. And just to clue everybody in, what is a synthetic? Crypto synthetics, or synths, are derivative tokens of other digital assets that are pegged to the value of the underlying collateralized asset, such as Bitcoin or Ethereum. In THORChain's variation, the project has opted to back its synth with 50% of the underlying asset and 50% RUNE, which is THORChain's token. The activation went live earlier today, and synthetics such as SBTC and SETH are now available to be traded on the network. Do any of you use the THORChain network? Let me know down below. Next up, let's get an update on the Hedara network. Hedara's HBAR Foundation launches a $100 million Sustainable Impact Fund. Now, what does this mean? The Sustainable Impact Fund aims to invest in Hedara-based solutions that involve carbon emissions, offsets, and removals, as well as other nature-based projects, the foundation said in a release. So more dApps being built on the Hedara network. Now, I would be curious to see if you hold HBAR, or does Hedara have a strong community? Let me know. Genuinely curious. All right, that is the video. My name's Austin. Like always, see you tomorrow. And if you will be at Bitcoin 2022, the largest Bitcoin conference of the year in Miami from April 6th through 9th, I will be there. My brother will be there. I hope you will be there. And be sure to use code Altcoin Daily for 10% off your ticket. There's a link down below. Join us.